Good evening, friends. Welcome to this post-budget conference. I have with me Mr. Deepak Jasani, the head of retail research, and I, Vinod Sharma. I look after the private client group. Together, we'll discuss about how the budget was today, and what are the implications for the investors and for the overall markets. So, Deepak, welcome. How do you rate the budget, and what are the assumptions behind the budget?
See, the budget was not as bad as most people had expected. I think even last year something similar had happened. There was a lot of fear build up ahead of the budget that capital gains tax will come and a lot of other negative things will come in the budget. This time also there was some build up of such expectations which have not happened. So in a sense, absence of negative is positive. So, and there are a lot of other positives in the budget, a few negatives. Positives may a lot of allocations to the various sections of the society. For example, Mudra loans allocation has gone up, doubled. Rural, agri, and allied sectors also allocation has gone up by 24%. Women and children allocation has gone up by some 18%. A lot of funds have been allocated towards irrigation, MNREGA, Gram Sadak Yojana, rural electrification, rural housing and transport sectors. So, a lot of allocations have been made. There are certain assumptions on the revenue side. We will come to that later on. But net, I think uh, this is a budget which has not disappointed. Let us put it that way. It may not have excited a lot of people. Some negativity of demonetization has been sort of cancelled out due to this extra spending. Now, Vinod, what do you think? How the FIs will react to this budget?
I think the FIs have reacted. I think the numbers that we get today will see good amount of FI buying happening, and I think it has addressed those concerns which FIs had. For instance, uh, the FIs wanted that the India should really stick to the fiscal prudence. So by keeping the 3.2% of, let's say, the fiscal deficit, it has been achieved. More importantly, whatever they have done in terms of the expenditure by government has gone up by 25%, and by the loans what the government will take from the RBI have in fact reduced by 20%. So people were just thinking where will the money come from. So from that perspective, I want to answer this. But the fact that fiscal prudence has worked out, and it is a growth budget, and whatever the FIs in terms of negativeness which was there in terms of the laws on the whatever portfolio investments they did, I think they have been now done away with. So they are now there are no, let's say, thorns in the way of the FIIs. So I personally feel that the India's underperformance of the emerging markets as well as the US markets has now ended, and from here on India will do much better than this. And this we have been talking about since 17th of January, when we said that India's outperformance will start, and it has begun. And this budget has gone a long way in terms of reinforcing that re-emergence of India as an investment option. So I'd like to ask you that what are the taxes impact on, or what are the tax changes that have happened in terms of direct and indirect taxes?
Yeah, as far as the indirect taxes are concerned, there are very few changes because ahead of the GST, the finance minister did not want to disturb the structure. As it is, maybe after 3 months or 6 months, the GST will come in. So we will have an entirely different structure out there. So there was no point in changing the indirect tax structure. There have been the excess duty hike on cigarettes has been slightly less than expected. So maybe that is why ITC was up. There has been some changes on import duty on PVC resins, aluminum ores, etc. There is some reduction in import duty on select HR and CR coils, and reduction in import duty on LNG and on nickel. So broadly, these are some minor changes in the indirect tax front. On the direct taxes front, There have been some changes. Basically, the finance minister has taken the fight against the black money further. So now, for example, cash receipt above 3 lakhs will be taxed in the hands of the receiver. He will have to pay an equal penalty. Cash payments, which were allowed up to 20,000 as an expense, will now be reduced to 10,000. Search and seizure provisions have been made stricter. There will be higher tax collection at source in case the receiver does not furnish the PAN number. The TDS provisions have been extended, and there has been provisions of taking stamp duty valuations for purpose of sale of assets in certain cases. So a lot of changes in the direct tax front. Of course, the change in the slab rate from 10% to 5% will benefit a lot of people. People earning between 50 lakhs to 1 crore will be hit by that surcharge. So on a broader basis, about 15,500 crores relief, offset by 2,700 crores of fresh tax. So about 12,800 crores of fresh money in the hands of the consumers, which may be used either for consumption or for savings.
Okay. Then, how will now investors really benefit out of this?
Investors, basically, one is that more money is coming into their hands in their kitty, so they can either spend or invest, as we discussed earlier. Long-term capital gains, which was feared, has not come in, so that is another good thing. Interest rates generally in the system can inch downwards because the RBI's borrowing program has fallen by about 4% vis-a-vis the revised estimates.
Yes, that's a logical point.
So in debt fund investors will benefit out of it. Government has also announced a new ETF, which will include the CPSE stocks and some other government holdings. So that is another avenue of investment for the investors. We will have to look into the modalities or nitty-gritties of what kind of ETF it is. But broadly, a new instrument will be available for the investors. Broadly, these are the ways in which investors will generally be benefited. Apart from the fact that in case market goes up, then their valuations and wealth will go up.
Yes.
Now, Vinod, what do you think? The Indian market, will they get affected by the US markets and the developments there in any way? And whether the commodity prices abroad will have any impact? Will they sort of help the markets, or they will hinder the market rise from here?
I think Deepak well said. This is the kind of a budget which the markets will present to us every day morning in terms of the currency movements and, of course, how the US markets are fared. In fact, right now as we speak, the Fed is now coming around and they'll hold a meeting for the second day consecutive day, and they'll decide on the future course of interest. Their decision and their stance will have a bearing on our markets. We were very clear in this morning call itself, Deepak, where we had said that we are not worried about the US markets per se, essentially because of the fact that US Fed will not be able to raise rates at this meeting. Nobody expects them, and we also expect that based on the data which has come in, poor economic data in terms of lower GDP growth rate at the rate of 1.6%, which came in last Friday. I think the compulsions for the US Fed to raise rates have still not gone up so much that they have to raise. More importantly, like we are waiting for Trump to make his policies known, so is the US Fed itself, because that will determine what kind of inflation US will have. So currently, for the time being, tomorrow, a month after, 2 months, we do not fear any, let's say, rate hikes in the US, and therefore our markets will continue to do well. And the fact that the currency has also weakened, dollar, should also help our markets per se. So we are absolutely worried about the US, the rate hikes for the time being, and will, as far as the other commodities are concerned, that's a separate thing altogether. It will take up a lot of time. But let me assure our investors that crude is not going to go above $60 a barrel in a jiffy. It will be very, very long time, and therefore we don't have to be worried about. And if at all crude goes up, it will be very clear function that the global economy is doing well, and we have seen dollar crude, let's say, trading at around $146 a barrel. That was in 2008. The markets have done well, so I'm not concerned about that. So currently, the budget, which was it's an event which is out of the way, out of the rearview mirror. So I think tomorrow we'll get to see US Fed on the same lines that you have spoken about. But nevertheless, do pay attention to a morning call that we have in the morning.
Now, we know that there are certain other issues. There are certain assumptions made in the budget. Now, for example, the GDP is assumed to grow at 14 to 16% next year. And at different places in the economic survey, they have said that our GDP may grow between 6.75 to 7.25 or next year. So inflation is expected to go up next year because of the crude prices and the commodity prices going up. Now, divestment target in the budget has been put at 72,500 crores. Now, this is versus 45,500 crores in FY17. Now, this includes 11,000 crores by way of IPO of insurance companies. Now, this will also benefit the investors. We were talking about that. So, investors will have an opportunity to participate.
A lot of opportunities, in fact.
Correct. And strategic sales, the government has assumed about 15,000 crores versus 5,500 crores this time. So the target is very stiff because this is the highest ever divestment that the government is expecting. So we could expect that the markets could remain buoyant for a better part of the next year. Only then this target can be met. In case the markets don't perform, then government will find it very difficult to meet this target.
Yeah, I think as far as, let's break it into two. As far as FPOs of existing companies are concerned, they'll be a drag on the markets. But as far as the newer companies, which are unlisted government companies like IRCON, if they go out, I think there'll be enough appetite for them. Obviously, for the markets per se, the amount will be coming from by selling other stocks. To that extent, we need more money. But the fact is, these will be attractive, and the success of the issue will be a function of how attractively it is priced for the investor. But definitely, you're right. We'll have a lot of investment opportunities through IPOs in this current year.
Then corporate tax has been assumed to grow by 9%. Income taxes by 25%. Now here it's a very big jump on assumption of revenue collection. So it means that the voluntary disclosure scheme part 2 will be very successful, hugely successful. It means either that, or it means that the government is generally assuming more tax compliance from the non-corporate sector, or a combination of two, I think.
I think it will be a combination of both, because we are totally looking at the fact that overall the amount of money which has come back into the banking system, almost all of the money that was issued has come back. So therefore, if the money has come back, it doesn't necessarily make it a white money, and it has no color. So basically, it will be upon the depositor to explain what are the sources, and if they are very different and very different from his past dealings, so he'll be answerable and he'll be given a good opportunity. But the small investor need not worry. Anything less than 5 lakhs, nobody will be questioned in the initial phase. But it is the large depositors who are faced, and rightfully they should pay their taxes. Right now, while all the investors have got the benefit of this, I think the people in the larger bracket will have to now shell out more tax.
Correct. And the FM also mentioned that we are a non-compliant, non-tax compliant country. So we have to come out of that impression.
My sense is the government will collect more money than what it has projected. What seems like a 25% hike, it is a possibility that the government could end up collecting much more than this.
Right. Customs collection has been expected to go up by 13%. So this will mean that the global trade will increase. So currently, under the trade protection fear, there is a fear that the global trade will shrink a little bit. But the government is not so sure about that. So they keep expecting that the global trade will flourish going forward. So that is an assumption that they have taken. And rightly on that basis, 13% rise of customs has been assumed.
I think part of it, we can say that we are in a part of a global economy which has so far been slowing. there have been indications where we are seeing that the trade is now in fact increasing. So a rising trade or rising commodity prices to that extent are not detrimental to the overall economic growth, whether it is developed economies or own economy. So my sense is whatever the government has taken, that kind of a growth will definitely happen. And ours is an economy which is not so much dependent upon exports. We are largely an internal consumption economy. So I think I don't will not question the numbers of the government whatever they have assumed.
Subsidy payouts have been assumed to be flat. Food, fertilizer, and petroleum. Food, mein, there is a minor hike from 1.35 lakh crores to 1.45 lakh crores. So that shows the indication that government wants to sort of be of help to the poor and downtrodden. But fertilizer and petroleum have been kept flat. So in case the crude prices keep rising, then probably there we may have to overshoot that subsidy bill. But that we will have to.
Deepak, that's a question which is definitely which can happen. That's not possible. It's not in the realm of impossibility. But our own sense that the fact that you have kept out Libya, you kept out Nigeria, and you also kept out Iran from the production cut. What OPEC has taken 1.2 million barrels, 0.6 million barrel is taken by non-OPEC countries. So our sense is that Libya itself can give you that kind of a oil which they have, let's say, cut. And a rising crude definitely at $53, $54 will definitely motivate a lot of US shale gas to come on stream, and at the rate at which it is coming in, the economists think that the OPEC's cut will be redundant. So therefore, I do not foresee the stock prices rising, the oil prices rising so much. But nevertheless, the fact that a production cut has been put into place, it makes oil susceptible to a large hike should any short-term geopolitical event happens. That's it. But no sustained level of higher crude that we see in the current year.
There have been certain disappointments also in the budget, in the sense that corporates did not get a tax cut. The large corporates, only the mid-size people who had 50 crores and less of turnover, they have been given a tax cut. The larger ones have not been given. So now the government had promised 2 years back that we will cut the tax from 30 to 25, which has not yet happened for the bigger companies. So now, as we go for over the next 3 years, we will have to give that tax cut in case the government wants to stick to that commitment.
I think government will have to just ensure that the tax compliance, which is currently okay, will improve. And as tax compliance improves, government will not hesitate to bring down the tax. So currently, whatever benefit that has been given are to the smaller companies, 50 or 100 crores or less. So that is good enough, because those are the companies which have suffered in terms of people, their employees going out because of the cash crunch. So they will definitely have some kind of solace from this. And as larger tax compliance improves, I think it will only a matter of time when the next budget will see some kind of rate cuts happening, even for those corporates who are currently have not got it.
And two other disappointments. One is that people were expecting a bad bank or a public sector asset rehabilitation agency, which has not happened because NPA problem is yet not coming under control. So that people are a bit disappointed about it. And secondly, private capex, to kick off that, not many initiatives seem to be taken. Now, I think there is a limit up to which government can do. Beyond that, they can only sort of start the public capex and hope that private capex will kick in as the ease of doing business and such like happens and enhances, I suppose. What do you agree?
I perfectly agree, because government has to take those initial steps. So the fact that expenditure is going up by 25%, that means government has not shirked from taking this responsibility in terms of kicking off that start. Another feature that I believe can really do it is also the fact that the government has gone out and said that your long-term capital gains tax in terms of property will now only be eligible even after 2 years as compared to 3 years earlier. So this will mean a house which you wanted to sell 1 year after, you can sell now. More importantly, there are other avenues also made available to you. in terms of to ensure that you do not pay high taxes or do not pay the capital gains tax on that, because now other bonds would also be available. This I see will be a great step ahead, and which we foresee, and we definitely in the next 2-3 budgets we can see this, one of these things could happen, is the fact that now that additional bonds have been now given as an option. I believe that in a year or two from now on, we'll also see the index funds, ETFs, being given as an option. So
Okay.
right now we have seen money flying only from equity into
Infra
real
bonds.
estate,
Infra.
and then now it's time, because people have given with them now less responsibility. It's altogether different thing that how many people now really have a profit in property after 2 years. But the fact is, this is a step which will help the plug the take money out of the real estate and go into the financial let's say assets which have a higher velocity, and therefore the GDP could eventually take a positive cue from this.
So on a net basis, do you think we know that we have risen 900 points non-stop from December, late December? Budget is not disappointed, has mildly excited people. FIIs currently have so far been neutral. Maybe now they will get excited as you now expect. Uh, but do you think we can continuously go non-stop to say 9,000 and beyond, or we will halt, correct a bit by 300-400 Nifty points, and then in case there are no negative global cues, we will make an attempt to make a new high?
That you answer, Deepak. You raised a good question. What's your view on this?
So net on technical basis, we are quite heavily overbought in a sense. So uh, we may sort of correct a little bit from tomorrow onwards, maybe once the details sink into everybody, and then 83, 8400 may be a good base. From there, in case there are no negative global cues, we may make a fresh attempt to go upwards depending on how the state election results are. So by that time, we will have enough idea about the state election outcome. So in case there is no negativity coming out of that, then probably there will be a good base to rise from there.
Yes, definitely, I totally agree, because that is one area in which markets will be looking at. They'll keen to know that what is the state of affairs in UP, while there are Punjab, there are other 4 other states, but it won't matter as much as UP. Uh, our sense is that from a market perspective, even if there is a hung assembly in UP, it is a fact which is currently a known possibility. It could happen. So therefore, the markets will not fall as much. I don't foresee them going to a level of 7,900 and visiting that level again, even if UP is lost by the NDA. On the contrary, I believe that the fact that uh, the FIIs were looking only for this thing, what is the fiscal deficit, will with the eye on the upcoming state elections, will the central government be tempted to take those certain steps, give them lollipops that the government has not given. So I think the FIs who have continuously and relentlessly sold our markets from October last year will now find selling a very tough and a losing proposition. I think this will ensure, and more importantly, what you as investors and some of the analysts here on the street are worried, that the economic data could weaken, the numbers could weaken, quarterly numbers could weaken. It definitely numbers could weaken, but the fact is everybody knows that the main crux of the demonetization, the worst period of tightness, is behind us. That was in November. Now situation is only improving. So as the FM was saying, we see this, even if the numbers are poor, we see them merely as a transient phase in which ultimately the growth will be back. And I foresee that before these things become very clear, we would be looking at a much higher levels than what people are expecting that the markets will fall to.
Okay, now I think shall we start taking the questions? We have some
Yeah, yeah.
questions. Now, which stocks will benefit out of the budget? This is what was asking Mukesh from Mumbai. It's a very generic question in a
it's
sense. Uh, do we want to address it anyway?
you take this, then
Yeah, basically, see, a lot of build-up has happened already ahead of the budget, and the budget per se has not come out with any provision which will benefit a sector or a stock apart from what has already run up, I think. So, and this also gels well with the view that we are slightly overbought at this point of time. So, one should wait, identify some stocks which are likely to benefit, whether it is from the infra space, cement, consumer space, consumer durables, uh, and various agri-faced sectors. And then when the markets come to a very comfortable level, then probably go ahead and start buying.
yes, that's a good strategy. Uh, but let me just share with you some of the experiences which I have had at various conferences. There are times when people will say, "This is good in the budget. Shall I buy it?" See, these days the markets discount the good news immediately, and the fine print it gets discounted maybe a day earlier or whenever it is brought to light. But on the fact that what we told in the beginning itself, that there are many other things which decide the ultimately sentiment and where the market goes. So from that perspective, the essence of the number of stocks what you have in your portfolio and what are the stocks that you need to now have doesn't change much. So you need to just ensure that you keep your cool and don't get over, let's say, anxious or you go overboard in terms of running after stocks. That is not the uh, objective. So just pay attention to whatever the good stocks are there in your portfolio. For instance, what we like is that irrespective of anything else, private sector banks will definitely do better than the other sectors, because they are not dependent upon the government for say for any of those steps, and they're, as long as they are managing to and are able to lend money at a faster rate without ensuring that the NPAs rise, are a safe sector to be in. And there, you want to name any stock?
Private sector banks, we have a coverage on Federal Bank, the older private sector banks, right? Federal Bank, we have a buy, I think, on IndusInd Bank also. So, couple of banks I think we have a research reports on saying buy. So you can go through them on our website. The reports are available there. Now the next question is there any change in ATC section? I don't think the government has increased the limit of 1,50,000 which is available under ATC. So I think there is no such change in the ATC provisions. Government has instead opted to give a straightaway tax cut by reducing the slab rate. Yunus Ahmad from Kashmir says, should we sell Nifty stock in at this time to book some profit or wait? Will you take this?
Nifty stock means I think they may be having the ETF of Nifty
Huh. Or
or
Nifty, some
if they
large
are,
cap stocks.
yeah, okay. I don't think that you need to sell or sell stocks merely because the budget is over or something like that. If you think that the objective has been achieved, the kind of return that you're looking forward to in that particular stock, it has done, it has come, all means by book profits. But at the same time, that money will have to be invested into another stock. So if you're selling it, no issues. By all means, book your profits and look at our pick of the week that we send every week on Monday, and other stocks that come up your way through various reports, whether technical or fundamental in nature. Do pay attention to them. They are many. They come out with good results. For instance, what's your return on the pick of the week? Success ratio is what, 88,
Yeah,
80%?
about 90, close to 90%,
90%.
about 21% average return.
So those are the great picks. So I'm not saying that you should definitely sell stocks, but wherever your profits, you are into profits and your target has been achieved, I think it makes sense to move to other stocks. but don't sell stocks merely because a level has been achieved. You can ask for that particular stock view from research individually also. You can mail your portfolio known.
Sure. In case you are our customer, then maybe you can mail across those queries and we will try and reply to them. Now the one Sagar Dhankar has said, which sector will be hit badly with this budget, and which industry which can be exited with this budget? I don't think any sector or industry has been negatively hit by this budget, right?
For instance, the news of, so whatever that you may take, negative or positiveness, there are some industries, like for instance real estate, can be taken in two ways. That the fact that from 1 year now they'll have to pay, it will be treated as unsold home, will be treated as, let's say, house given on rent. So those kind of things will make things troublesome for the sector later on. But the fact is, pay attention. We all investors have limited amount of money, so pay attention to those recommendations which come your way, and keep type stop losses wherever stop losses have been recommended. And more or less, a budget is not an event on which you can make, buy or sell or totally churn your portfolio.
Correct.
This is one of those events which has happened. You can have a look, don't ignore it, but it doesn't change much of the whatever holding that you would have. So it is just one of the events, and now it is in the rear view mirror. And as far as the government steps are taken, government can take a step which we have taken in a single day. Government can take several such steps every month, for instance. So government's action on budget, it does not end that the budget has come, now government will not act. Government will act every day, whenever it is required that the government should act, they will act. So you'll continue to find these kind of actions coming in from the government.
Yeah, and there is a difference between macro impact and micro impact also. And within the macro impact, whether it is material or immaterial, that also one will have to see. Whether the particular provision has a very big impact on the sector or a small impact. And secondly, whether the stocks that you own will get impacted by that or not. So there are a lot of ifs and buts. You will have to give a little thought to what you are owning and how that stock will get impacted by the provisions. Now,
I think wherever we have a council, take that.
one person has asked about the RBI meet. So, Vinod, will you like to answer that? What do you expect out of the RBI policy? Mr. Sunil from Mumbai. What is your call on RBI policy, which is scheduled on 8th of February, and what will the impact, as if we see the total jump in Nifty is mainly contributed by banking sector?
See, obviously, Deepak, that you said earlier also, that the fact that the government borrowing is less than what was last year, 20% less than what was last year, and lower than what was expected. So from that point of view, it leaves a lot on the table for the let's say private sector, for the banks to reduce rates, for the RBI to reduce rates. So there is a possibility, but more importantly, it will look at the kind of situation, what is the Fed thinking, that will come to know tomorrow. But definitely we can say that 0.25% is a cut that we would expect either in this meeting or next.
Yeah, interest rates are headed down. How much down is slightly uncertain, but maybe one or two interest rate cuts of 25 basis point can come in the next 1 or 2 quarters.
Yeah, the government itself was willing to, RBI itself was waiting for the government to let it know whether it is sticking to its fiscal discipline or not. Now that they have stuck to the fiscal discipline, and some room for now rate cut is definitely on the cards.
Now we'll take the last two questions. One is the question people are asking about whether it is the right time to buy IT and pharma stocks. And we'll come to the second question later. So
I think as an individual investor, we are not bound by those guidelines that you need to have exposure to every stock
or every sector.
Yeah, every sector. Our advice is, if you are making up your mind, by all means go out and do it. but stick to the kind of recommendations that we are sending out, coming with an accuracy of, let's say, around 90% and the returns of around 20% or so. I think there is enough room to be enough number of stocks to choose from, and therefore you can look at that. But IT at this point of time, the bill has been introduced, but it is not necessary that the government will actually go out and pass this as a rule in the US. So if the rates, the salary for a let's say H1B visa, if it is a lakh and 30,000 odd rupees, which dollars, which is now there, I think if it comes down, IT sector will definitely be a good pick. But currently, only a bottom fishing can be done by those who have sold their stocks earlier and now they want to re-enter. Maybe possibly a part of that can be bought at this point of time.
Yeah, and then there is one question by Debabrata Das of Rourkela. Any changes to long-term capital gains tax related to equity funds? I don't think there is any change in the long-term.
As far as the
capital
equity is
gains.
concerned,
Equity funds.
mutual funds that you look at, because equity was cleared by the one of the secretaries on air, that there's no change. Mutual funds, maybe let the fine print be known. Currently, I don't think there
first
is
glance shows that there is no change. So, if there is a change, then we will note later on. But it does not seem that there is any change in the long-term capital gains tax on mutual funds. So, I think we have addressed enough questions. There are a lot of more questions, but I think limitations of time.
Let's end it. What's your final take on the budget? How would you rate it? On a rank of
let us not do ranking out of 5 or 10. That is for the media to do. I think the budget has not disappointed. That is a positive, and we will have to watch out. The domestic investors anyway have been excited about stocks. What will be the reaction of FIs? That we will come to know over the next 1 or 2 weeks. So that is very. We'll closely watch that.
We'll give a thumbs up to the budget, primarily because very tough environment. Remember, Deepak, the government has made this budget almost in darkness. There is no data no data since after October. There is no other data which the government had access to. So primarily this budget has been made and they were done a good thing. So we'll see a good appetite from FIs coming in, subject to whatever US does. But all said and done, I think we could have been worse. That's a great job. So well done, Mr. Jetli, and it augurs well for us, for you as investors, and for us as a country. Thank you.
Thank you for being with us. Happy trading and happy investing going forward.